ENPH. This is Enphase Energy, and well, nasty, I guess. They had a huge allegation that just came out, um, saying that they're cooking the books and they're fabricating revenue. And this is coming from Prescience Point Capital Management, who is shorting them. So this is just an allegation, but it's nasty, and this is a huge drop right now that could be based on fake news. Sorry about that. So, yeah, Enphase, apparently, yeah, there's allegations that they can't be trusted and they're cooking the books. And so the stock is just going ugly kind of into close here. So that's just a look. Yeah, so I just took a look at the balance sheet, and their available cash is about 600 million, and their total current liabilities is about 250 million, less than half. So this is one of the best balance sheets I've seen. It's one of the only positive balance sheets in the entire stock market right now. So I don't know. I don't know what they're cooking. I mean, I guess they're alleged of cooking some revenue numbers and stuff like that. But their balance sheet looks positive. I mean, they look to be in less cash trouble than almost everyone else I've mentioned in the past month or so. So I don't know if this is fake news. Usually those kind of allegations are true. They don't usually turn out to be false when someone's accused of cooking the books, but it can take months and months for that kind of stuff to play out. So, I don't know this. Yeah, let me do some technicals on this. So this chart looks, relatively similar to the general bull market trend we've gotten on the market. But whoops, they peaked much earlier than most of the stocks on the S&P. Yeah, so I'm in on a 15-minute chart here. So I guess one of the things to point out is this trend line, this kind of bull market line they've been on since the bottom. Before this news and this big sell-off came, they've already sort of bubbled above the trend line, broken down, and back tested this thing. So this is a bearish spot to be before this news even came out. And now the volume on this sell-off is monstrous. So this is definitely going to be a huge rip to the downside. And these things often oversell a bit. So, I mean, if you're kind of a tricky day trader, and this is not investment advice, but this kind of a bad news thing is sort of the inverse of those news splashes you get. You get where the thing kind of pops and reverses down. Like these bad news blasts where you get these crazy sell-offs usually will oversell. And I don't know. Let's see. Let me pop it back out to an hour. I don't know where a target is for actually an oversell target. Let's take a look. But these often will oversell. Okay, so before this whole thing, I mean, it was in a bullish trend before the crash, and this stock has been in a roughly bullish trend. I mean, here's the liquidation crash. So, I mean, all of this is fighting against a pretty long-term uptrend here. And I guess if you want to do that kind of thing, maybe like 30, 34 or something as a floor with all this recent activity as a point to where it's going to start getting oversold. I mean, so if it dives down here into the 20s or something like that, I mean, that's way oversold. And, a day or two, probably a bounce back. And I don't know where to look for this thing to kind of land. I mean, there's this whole kind of zone here as a reasonable area for it to land. But if it sells way past here, there's a good chance that you could do a little bounce back trade kind of thing. And let's take a look at the S&P, see if this thing has turned over yet. So, yeah, sort of. It kind of got down, but it's not closing down. So this looks like it's trying to turn over. And I think in order to say it's actually turned over, I think it needs to close down here somewhere around 31 or something like that. It needs to close below all this stuff. And it's not getting down there yet. So let's see if we get a sell off towards close. I think if this thing sells down below this to close, we're going to be looking at a wave down and possibly like maybe a week long kind of wave down after this turnover. And I'll show you what's going on here. Is DXY still pressing? Yeah, so the DXY, this is a big consolidation reversal on the DXY, and it's now broken out to the upside, and so that's downward pressure on the S&P, and then what's financials doing? Just kind of sitting there, okay. But the VIX is really the big deal, and the VIX, as the S&P, well, right here was a huge one. So this was our island top where the S&P was flat and the VIX was pressing up, and then I mean obviously the VIX went up while we had the crash. That's normal, but this push up in the VIX while the S&P was flat on the island top, this is a huge signal of a volatility reversal, and we got one. We got a big one. We got a gap. We got a jump up here, and now we're in a completely new volatility area. And this whole push up here is another upward trend in the VIX, and the S&P is actually consolidating to the upside while this is going on. And now it's maybe flattening out and trying to turn over here. So if the VIX presses up, the S&P should come down. And this is another signal of a down move in the S&P. As far as the dollar is concerned, as far as the VIX is concerned, and those have been the best signals. Let's check out the puts. Well, people went way short, and now less short at close. I guess I don't know why, but this is crazy. So there wasn't right at open or right before open, people were going crazy, but there wasn't really any signals coming into open that much was going to happen. I wanted to see if it would pop up. I was looking to go short if it was going to pop up, but what I ended up doing today, I did do a pretty big short position today, and it was not a normal one. I just saw this here. I saw the VIX kind of pushing down below the moving average here, and I just went and checked kind of the put prices, and the put prices were really, really good on the SVXY, which is the short VIX, and so I did a put on the short VIX, which is long vol. I'm expecting the VIX to go up, but I don't like holding the VIX or the TVIX longer than, well, ever, really. I mean, it's a good indicator, but it's not something I would ever hold long term because you're fighting against the structure of the ETF if you're holding it long. I only like to go short on things like that. And so there's a short VIX, there's SVXY and XVSX kind of, SVXY, the short VIX. And it's basically an upside down VIX, but it's something that I'll hold long term because the structure of the compounding and the volatility and all of that is not a negative carry when you're shorting a short. It's upside down, so the downward pressure from the compounding is actually helping you. And so that's what I've been doing. I mean, I got a long vol position back here, and I just added to it here. That's all I did today. So I think we're gonna break down. I guess check out transportation. Not really breaking down. Okay, Vola is pushing up more than the normal VIX. So this is just the general danger in the market, and the VIX just indicates how big of the swings and up and down movement the market's expected to do. And so, I mean, this is kind of counterintuitive, right? Right now, we're just doing little moves that aren't swinging around, and the VIX is pushing up while we're doing that. Like the stock market is not only not making big moves, it's trending up. So that should be chilling the volatility out, but it's not chilling the volatility out at all. It's doing the opposite. So that's super dangerous. And that's what we did here right before we got this blast. So I'm kind of expecting the VIX to blast off again. And so that's why I just added to the VIX position here. So yeah, I'm just kind of positioning for the VIX to go up some more. And there's really nothing else much going on. And then as far as actual stock shorting for the US, the Russell is my favorite short right now because people are longer on the Russell than on, I mean, like the like on the SP, but just the fundamentals of the Russell. Like these companies have the solvency risk where they can't pay their bills, they don't have cash flow, their businesses are jammed just like everything else, but they just don't have access to the loans that the bigger businesses have access to. They're not doing any buybacks. These small caps are not doing buybacks. Some of them are issuing new shares instead. And then I guess the bigger news today, and the Fed's not going to update their balance sheet today, it looks like, but all of this talk about the Fed and the bond buying and the Fed's balance sheet, blah, 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 like hundreds of articles about how the Fed's supporting the market and they're going crazy. I looked at the freaking balance sheet and it's flat. Like if you go out to like the month level on the balance sheet, it looks kind of parabolic. But if you zoom in on the last couple weeks, just the last couple weeks of the balance sheet, I mean, it was going up. And then the previous week, flat. They're not expanding the balance sheet at all. It's flat. And now, like, this is a new balance sheet period where we should be able to see what's happening this week, but they haven't posted it yet. And I'm expecting it to be either flat or, I mean, he said they're not going to decrease it. He said they're going to continue what they're doing and they're prepared to blah, 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 blah. But in reality, they're not expanding the balance sheet right now. The Fed's not expanding their balance sheet, and the Treasury is starting to issue. I mean, their bond issuance has gone 4x, and that takes liquidity out of the market. That's liquidity being taken by the government for government spending. And so right now, already they're issuing 4 times the amount of bonds they were when the Fed was going crazy. And now they're looking at a new infrastructure bill. They're looking at new CARES Act kind of stuff for helicopter money, uh, for small businesses and for individuals and things like that. And that's just going to be a mess of new treasuries issued. And so that's all less liquidity. So that's the kind of stuff that I've been talking about over this week. Yeah, this looks like it's breaking down already. But I think for the S&P to break down like now, like to start a run down, this thing is going to need to close. It's going to need to close down here. It needs to go ahead and break down now. But this looks like it's turning over to me, and the indicators on like the dollar and the VIX and stuff like that looks like it's turning over. And then just sort of the technicals, like we got this massive rejection off of our Volmageddon trend line, and this is a 2-year long trend line that goes back to the bottom of Volmageddon, and this is where we back tested on the way down on the big crash, and then we got below our 12-year trend line, but completely blew through it, and so we've tested this here, and I was, when we got down here, I closed a ton of short positions, and this move up, I've just been really watching it. And today on open, I was gonna see if we were gonna pop. Like, is this gonna be a bull pennant? And it doesn't look like a bullish pennant at all anymore. This looks much more bearish, and there's a ton of bearish signals. And if we close down, this is gonna look super bearish. But I think that's all we get. I think we're just back testing this bull, the bull run support line here. And if we break out of here to the downside, I will go back to calling this thing a bull trap line. So I was calling this a bull trap line kind of around this area when we broke down underneath it, and we broke down and back tested it here, and I got short here and got burned. We went on this run here, but okay, so we've broken down and back tested the thing again, and let's see what we do. So we didn't have all the craziness that we have now. I mean, we got a little pop and vol. We didn't get crazy VIX or anything like this along this area, but now the volume is like big time volume. Tons of money changing hands along this area, and now we have the VIX increasing dramatically over this, and so this is an uptrend with super low, volatility. And the volatility shouldn't be pushing up in this area. And when it does that, it's a big signal. And then once again, it's doing the same thing here. And that's, that's a turnover kind of top signal as far as the volatility is concerned. And then just the dollar has been swinging opposite to the market well, not the whole time, actually. The dollar only started swinging opposite to the market about here. But it has been swinging opposite to the market this whole time. And so it's a good indicator to look at. Let's look at the yen. Oh, the yen's breaking. Okay. Yeah, so we're getting all the stuff now. The yen's starting to break down, and the dollar's starting to break up here. And so those are all indicators that the S&P wants to break down. I don't know if we're getting any metals stuff. Yeah, the metals are just kind of sitting there. So if we get a really big rip in the S&P, that probably will pull the metals down. So I don't like them at the moment. And then IWM is my favorite short on actual stocks because they just have the most risk exposure and they don't have buybacks and the most solvency risk, all of that stuff. The financials, I did like short position for IWM and financials, but the bond buying kind of stuff is helping financials. The yield curve has been steepening, which is helping financials, so I don't like it as much of a short as the IWM. I don't know. Oil is just kind of meh. I'm not interested even in looking at it right now. And this put to call thing, usually, that's on the Nasdaq. Okay, people are still long Nasdaq. Russell volatility. I mean, Russell volatility has been higher than like the S&P volatility the whole time. It's up here. So that's another reason that I like shorting IWM. IWM's the Russell 2000 ETF. And then our put to call on the S&P, that first turnover, we got like a historically crazy amount of calls before that first rip down. There was like 15 million call options that were opened, which is like 4 times the highest amount ever in history on call options. And it immediately just ripped down and burned all those people. And then we had a huge number of puts on the bounce, and it went up and then burned everyone that put the puts in at the bottom. And so now people put a bunch of puts, and it hasn't moved yet. So it may wait until people go long again before it actually turns over, but it looks like it wants to turn over now. And I don't know how long the S&P can kind of hold up if the dollar breaks down, the yen. Like if the dollar breaks out, the yen breaks. If the VIX is breaking, I don't think and the Fed's not actually expanding their balance sheet at all. It's flat. Like it's a complete lie. The whole thing that the Fed's expanding the balance sheet, all that news this whole week is complete BS. Go to the Fed website, look at their balance sheet, and zoom in on the past like 2 weeks. It's flat. They are not expanding the balance sheet right now. And we'll get, hopefully, well, it might take a couple days for it to post, but we'll see what's going on this week too, soon. And I am expecting that thing to be flat again. And if they're contracting the balance sheet after all the stuff that Powell said, I'm going to be upset because he is like, no, like we're going to continue exactly what we're doing and we're prepared to blah, 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 like all the stuff he was saying right now. But meanwhile, he knows that balance sheet's dead flat. Like he's just BSing everybody about what they're actually doing with the balance sheet. Like that was a bunch of BS, the whole thing. And the balance sheet is publicly available to everyone. You can go look at it. It's a few days delay. It like posts every week and updates, but wrong. That's not what they're doing at all. So I think, well, we'll just have to see. I mean, this looks like it's going to break down to me. I'm not expecting this after, yeah, after everything that I can see now. I'm not expecting to get up here and test this again at this point. I'm expecting this thing to break down, and the target is this. The target is this line. And usually when you're going to go break one of these long-term trend lines, this is the 12-year long trend line that goes back to the bottom of the financial crisis. And what you do when you're on the backside of a bubble is you backtest the trend line, and then you dead cat, and then that probably will do it, actually. With the amount of volatility that we have right now, I think that counts. This is probably our dead cat already. And then you just slice through this thing, and then usually what you'll see is a break. I mean, if you go look at like the Great Depression, the Nikkei bubble, the housing crisis and all that, you build up these trend lines over the course of the bubble, and you get increasingly steep trend lines. And so this is the trend line that supported that 12-year bull run off the bottom of the financial crisis, and just the last 2 years, the steeper trend line off the bottom of the 2018 crash here. That's what these two lines are. These are not horizontal support lines. These are like long-term bull market support trend lines, and they're tangent waves. This is a tangent to like that whole 2-year wave. This is a tangent to the whole 12-year wave. And so you back test an upper trend line, you get a dead cat, you break, back test, usually dive, back test again, and then kind of swing out and back test it again sometime in the future. And so that's the general unwinding of a bubble shape. If we are going to unwind and go into bear market territory that you would normally see, in a bubble. And so I think that's it. I mean, I think we're getting off this line, and now we're aiming for this one right now. Like today, that's what we're doing. And this is already a dead cat, so I don't think we need to do another like pop above it. But I mean, whatever, like a little thing like that. But I don't think we're gonna do like a long extended thing again before we break it. Probably not. This is a legit serious one here, and it's the volatility is pop. It's really high already, so a down move should be a big one. And just on the Elliots, I mean, if you just do like a ABC, like C is usually the bigger wave, so the length of this one a little bit longer than that, something like that. Yeah, so that's it. Just long enough to break this, tap it, usually dive, maybe tap it twice, and then you can get out to the next thing, which is just swinging up under this line over the next year or something probably. That's kind of the bear market outlook. And then, of course, if you're a Dave Portnoy bull, then all in long right here and just off to forever highs. I think that the bulls need to be careful right now. So basically, where we are right now is an awful spot to go super bullish, just because. Well, if we let me flip through the let me go out to the weekly. So this is the MACD out on the weekly, and this is kind of the long-term couple-year the bull bear, move. And so we off the bottom have done a big bull run. Obviously, this is a huge bullish run on this trend line. But if you see where the red line is now, like we're still down here in bear territory. Like we're in bear market territory long term over the next couple of years still. And this blue line is diverged from the red line pretty good. It's pulling it up. And so if the red line gets up here into the bull side of the chart, into bull territory, and it doesn't look like it's flipping over, like if it gets up here and looks like it'll stay up here, then that's long term bullish. And that still looks like it's probably a month or so before that would even be in that kind of range. But if this thing flips over in bear territory, that's nasty long-term bearish. So right now, it's just making a bull move in bear territory, and it's not really conclusive. But if we go to the dailies, we're up here in bull territory right now over the next month or two, kind of look. And this is just not a very strong bearish move right now. We're in bull territory up here, and this needs to make a real bear move down in order to get bearish. And if this gets bearish, that'll be pulling the other one down, and then everything gets really bearish. And so that's the thing to watch right now, but this is just kind of chilling in bull territory. It's really not signaling yet. And then if you get down onto today, this is sort of neutral territory, a little bit bullish and turning over, up and bullish, but flipping over. Already kind of turned down towards neutral. So this is a ton of neutral signals on the momentum. Nothing is being signaled like as to where we're going to go from the momentum indicators, but this is definitely bear. It's a bear market still. Like all the indicators are bear market. We're underneath this long-term bull market support line. Like we're not in a bull market until we get out here. We're using this as support. We have to be above this thing, using it as support. We can't be rejecting off of a major bull line. That's bear market territory. And then the VIX is way bear market as of this week. Like even when the VIX is in this territory, like in the 20s, like that's still bear market. Like this gap here is pretty much pointing at bear market. Like down here, this is bull market VIX. Up here, this is bear market VIX. And so we just tried to push down kind of towards, pushing towards the bullish. And then we got this kind of out of bounds move that was against the chart, which was a big signal. And then obviously we got this huge crazy thing here. And so that's all bearish, very bearish, bearish. And yeah, so just yeah, as a bullish thing, like it probably only takes a week or two to see if the signals move up into bullish territory. So basically for the bulls, I mean, there's kind of two spots that are good to look at buying for the bulls, and this is not one of them. You want to get up here, kind of test this and get out here, get long-term bull market signals. Go long when it's actually a bull market. Like if we get into bull market signals, we'll be up here. The VIX will chill out. The MACD, the momentum stuff will be up to the bullish side. And so that's where you go long for the next 6 years or something, bull market stuff up here. If we get everything looking like a bull market, then it's no big deal, and it's going to be low volatility and blah blah blah, which looks highly unlikely right now with all the stuff that we have going on. And then obviously the actual economy is ridiculous; it's like destroyed. So, but the other thing is looking for a spot to buy. We're at a high area here, and we have high volatility. So there's a high chance that we make a big move soon because the volatility is high, and so after we make that move is a good time to look at buying things from the bullish perspective. But like kind of hanging in the balance with super high volatility, just understanding where we are in the market here. And so I have a bear market model, and I'm expecting this to turn over. I'm looking at turnover signals right here. But it could definitely just go to a bull market, over the next few weeks or something like that. It could just go this way. Volatility could chill out, and if it does that, then I'll be, talking about the momentum indicators and looking at that. But as for right now, that's what we're getting. We're getting bearish dollar breakout. We're getting a bearish yen breakdown. We're getting small caps turning over. Financials also turning over. The VIX is pushing up against an S&P that's going up. That's super scary, and the volatility is way up here in the 30s already. That's really, really dangerous. And the VVIX, and just like the downside risk in the market is, I mean, monstrous. This is crazy. So this was around the dead cat before we had that big drop here. Right now we're already way up here. So where does this go? I mean, if we get a drop even halfway to the bottom, like this thing is going to go like this. So yeah, I guess that's just kind of an idea. Oh, what's the treasure? Oh, the treasury yields are pushing down. Okay, so yeah, the yield curve steepening is decent for financials. Okay, is it back? Yeah. So the yield curve here is decent for financials. That's a decent look for financials because the spread is sort of the rate that the banks can make. And so this is an indicator basically right now, the way that the yield curve is going. I mean, the yield curve is sort of a chart that's going from the 2-month treasuries out to like the 30-year treasuries. And the 30-year treasuries are, the short terms are close to zero, and the 10 years and the 30 years are at like, I think they're at like 1.6% now. So we're getting a steepening yield curve, which is the shape that the Fed likes usually. And this near zero, kind of not so steep yield curve just points out a super long, kind of slow recovery, but not deflation, not really inflation. It's just kind of blah, long term, which is okay. The yield curve looks okay right now. The yield curve's not doing anything scary, but that's the general outlook. And yeah, that's kind of my stuff. So I was hanging on to a couple of tanker stocks, and the tanker stocks didn't start moving up. They're just kind of flattening out or maybe moving down here. And I don't think that's a good hold, with everything else looking like it'll move down. I think there's risk that that'll move down with everything else, including whatever. I don't know. Like if it starts ripping down, which it could, I think everything's kind of at risk. And we really just have to see what moves. So I think it's just a high risk basically environment now, and it's hard to predict. But I mean, the big move that I did is went long vol, just because the crazy, whatever it does crazy, probably will be good for a long vol position, and then can just work on it from there. Let's just see what we get. It's just kind of nutty. And then as far as the shape of the whole thing, yeah, if we break down, see, because back here is Volmageddon, or this is Volmageddon, and this is the 2018 bottom. And so we're getting a nutty, crazy expanding shape this way and this way. And so this is a really long-term expanding shape here. And I think we might be kind of reversing that. We might be going into like a something like that. That's what I think we might be doing now, is a kind of reconsolidating It could be like a diamond top shape for a move down much later, but I mean, these swings are like 6 months to a year kind of swings. I mean, this was back here at the beginning of 2018. Like this was 2 or 3 years ago. So I don't know if we're going to swing way down here, but that's kind of the expanding shape that we have now. And yeah, if we just break down under this one and swing out like that, this will go here. I don't know. Yeah, I don't know. I'm just drawing like some random ideas of this huge crazy shape. But the huge amount of volatility that we have makes it entirely possible to swing like way across this range back and forth. And so if we do start getting that kind of stuff, huge swings, that could be really, really interesting for trading. I mean, like you could go, crazy short put options down, crazy long call options up if we start swinging across this whole zone. And that's kind of the space I think we're in. I mean, I don't think that this kind of expanding volatility wedge is going to continue. Like, I think we'll get into kind of I just really don't see like all-time highs coming. I know people think like this kind of V up to all-time highs right here is likely, but I just don't think that's likely at all. But right now we're in this space. We're in this expanding space with super high volatility, with the complete ability to completely span this thing just like even faster than this came up. The down moves are faster than the ups. I mean, that's entirely possible. But I think just breaking and swinging up under this is more likely. That's the move that I think is likely in the bear case, is just to get under this trend line. And then the next trend line is way down here, like 12 or 1300 or something like that, like way under all this stuff. So that's something to talk about a year from now, maybe, after we see what kind of activity we get in this whole thing. But this could be the crazy. I mean, it's already the craziest thing ever the past year, but still, just like the next 2 years in the stock market could be the craziest stuff ever. So pretty interesting. Fed is not pumping. Go to the Fed website, go type in Fed balance sheet into Google, look at it, zoom into the last 2 weeks. Let me just do it again. Let me see if they updated it. Okay, here we are, the Federal Reserve Bank of St. Louis. This is the Fed balance sheet. And, this is the 2008 where they blew it up, and then they just kind of flattened it out for quite a while. And then here, everyone's pointing at how this balance sheet is just going parabolic, and it's absolutely crazy. But let's actually zoom in on it. And look, it did. It went up crazy. Because where did we start at? 4 trillion. And we just went up 6, 7. But now we're here. And let me just zoom in a little closer on the last week or two. Look it started chilling. The last week is flat. It's flat sideways. They're not pumping anything. And we're about to get another update for this week. And if this thing is pointing down, man, Jerome Powell's just saying like the opposite of what they're doing. Well, I went from 7.1 to 7.1, 7.165, 7.168. So yeah, flat. They didn't expand the balance sheet the last week. And yeah, and this is while he's doing all the testimony to Congress and answering a million questions and talking about how they're being super aggressive and they're opening this program to buy individual bonds and they're whatever they're saying. Here's what they're actually doing: nothing, absolutely nothing. So that's what the Fed's doing right now. So we have the Fed not expanding the balance sheet. We have Congress super expanding their bond issuance and government spending. That's reducing liquidity. Instead of stock buybacks, it has reversed into people issuing new shares of stock. That's downward pressure on the market. And then in Europe, if you look at the off-market trading, it's been green over the last 3 months. The off-market trading has been green every day. Over the last 2 or 3 weeks, it's been red, 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 red. And so the off-market trading is a bunch of people in Europe, especially like the London traders, their market opens early, moving a ton of money into the U.S. market over the last couple months because their market looked terrible. Now they're reopening and their market's looking better. They're sucking liquidity back out of the U.S. market and putting it back into their market. So that's how the liquidity is looking right now. It's looking like less and less and less liquidity in the U.S. market, just for the moment, until the Fed actually does blow their balance sheet up. So I want to see the next one. They're supposed to post it. Yeah, but here, like, this is a week ago, but they didn't post it until like 3 or 4 days later or whatever. So, or 5 days later. Yeah, it's almost like a whole week late that they posted. So yeah, but that posted on the 11th. It's what, the 17th now. They should be posting the next one. They should be posting it now, but it's not up yet. But this is a very important one. This is an important one, and so I'm going to be looking at the dollar breaking up, yen breaking down, volatility breaking up, balance sheet going flat. Those are the biggest things to look at right now to indicate this market, and they're all just starting to turn bearish. They haven't started to like go crazy yet, but let's see if the S&P closes down today. If the S&P closes down, that could be the beginning of an actual multi-day downward move, and that's really what I'm expecting actually right now. That's what I think is going to happen. So, not investment advice, and I don't even remember what this video is about. I can't even remember. Some company that got bad news. I forget. Doesn't matter. There's not a playlist for that one, but you can go to my playlist, check out financial education videos, or the COVID playlist or the oil stocks. There's a bunch of videos on these different topics. If you want to look up individual stocks or something like that, and yeah, whatever. Just leave some comments, and I am gonna be going to the safari park tomorrow, and it's also my mom's birthday tomorrow, so I don't think I'll be doing a video tomorrow, but maybe I will. Maybe like late after market or something tomorrow. I'll check in and see what's going on. But that's what's up, and let me know what you think about the Fed balance sheet and the money printing now that you can actually see what that is flat. Happy trading.